Now joined at the desk by Michelle Dickens, Managing Director at TPN, for a look at this particular sector. Good to have you with us, Michelle.
Thanks, evening.
It does seem as though there are several headlines that this particular sector is no doubt booming. Is this maybe reflective of the South African economy and where the South African consumer is, that they can't afford to necessarily purchase property, hence the rentals and affordable housing is actually picking up?
Absolutely. So rentals is picking up overall. When you look at affordable housing specifically, and here we look at our tenants who are renting for below 3,000 Rand per month, we're actually seeing a slight shrinkage in the number of tenants in this particular segment of the market as they move up due to rental escalation. So we've seen a shrinkage from 24% to 22% as they move up into the above 3 to 7,000 Rand range, and above that into the 7 to 12,000 Rand range. And I think that's because there's not enough rental property stock in the below 3,000 Rand category. So it's very exciting for us to see that there is this increased renewed energy from property developers and institutions into creating property stock in this below 3,000 Rand category.
Is this property stock picking up fast enough? We hear the likes of, there's a Joshco, the Johannesburg housing, social housing company, as well as Calgro M3. I know that they have a development that they have in Vlierhof. Is the stock picking up and developing as fast as it can?
I don't think so. I don't think so. You know, we've got 3.5 million households in rented accommodation in South Africa, and only 22% of our data indicates information rental below that 3,000 Rand category. I don't think so. I think as people move out of the township areas and coming into formal markets, there's a huge demand for tenants in that market. One of the cautionary or flags that we're seeing, though, is that we've seen a decline in payment behavior in that particular category, and this is a leading indicator for us. The below 3,000 Rand mark is a leading indicator for us and potentially means a turn across the entire market in terms of rental collection.
You mentioned below 3,000 Rand, and to many South Africans, especially those who watch the show today, that seems like a menial sum of money. Number one, are we seeing that the rentals here are able to grow at a sustainable pace? And number two, is the format for rentals strictly able to adjust to maybe the occupiers actually being able to purchase these homes?
So you say that below 3,000 Rand doesn't seem like a lot for many of your viewers. In actual fact, 86% of tenants rent for below 7,000 Rand per month. 1%, if we look at the market, only 1% rent for above 25,000 Rand per month. And when you look at people's salary and what they're contributing, our below 3,000 Rand market can be contributing, rent per month, can be contributing up to 40% of their salary just to their housing. Sure. Versus if you look at the 3 to 7,000 Rand, 7 to 12,000 Rand, that decreases down to 30%. You take into consideration things like food and transport inflation, which we expect to go up. That's going to have an impact immediately or more substantially on your below 3,000 Rand market. So those tenants absolutely are going to feel the pinch first.
Maybe if you can give us an idea of the kind of areas where we're seeing a lot of this development. I know in the city as well as in some areas of the township, but are we finding that they are linked to the transportational development nodes like the Gautrain or rapid bus system in Johannesburg?
Absolutely. So inner city, lots of development going on in the inner city, both in Johannesburg as well as in Pretoria. Soweto, a lot of development going around in Soweto as well. We're seeing quite a bit of development in the Somerset West area. So it's not just in the Gauteng area, it is in Port Elizabeth, a lot of development going around in Port Elizabeth. You've got a company like Tough, which lends to smaller landlords, not your big institutions that are coming in, bringing on 8,000 properties, or in the future, bringing on smaller, maybe 6 or 12 unit flats. So a lot of development from a micro landlord perspective as well.
Tell us about the kind of investment exposure. We probably have a lot of people watching today who want to know how they can get in on the action. How do they get exposure to these this affordable housing development fund?
So for me, affordable housing is quite specialised in that your costs have to be kept to a minimum. And so I think it's more sustainable if you're looking at bigger developments. Like Joshco, like AFCO, where you're coming in and you're looking at 500 units per building, where you can keep your costs down, where you're not competing with levies for example, special levies in smaller units where you've got multiple landlords. So for me, affordable housing really is about institutional lenders, and I think it's better positioned for institutional lenders as well.
And the kind of returns we're talking here?
We're looking at about 9.75 below 3,000. I had to think about that for a moment. 9.75% for below 3,000 Rand rentals. And as the rentals go up, we start to see those yields decline a little bit. Our upper end of the market, we're looking at 7.5%. On average, 8.77% across the market.
Those are good numbers you're talking. They beat inflation. Michelle, thank you so much for joining us today and for giving us an update on the affordable housing market. That was Michelle Dickens, Managing Director at TPN.